It's Sunday the 23rd of July 2017. This is a chart update for Alkane Resources and the rare earth market. The rare earth market's really sort of caught a little bit of a bid in the last few weeks, and I just wanted to have a chat about a couple of stocks in there and it in general. The one that I've been following for many years is Alkane Resources. They have a project that they're seeking finance for in New South Wales, with many of the sort of specialty rare earth elements, the higher value ones in particular, and some zirconia too. That project's sort of been on hiatus for many years now, gradual sort of permitting, and it's all permitted and ready to go. But they just need, they need $500 million to get it off the ground, and that's sort of been slow to come. In some videos last year, I talked about this move. I was really following this from 20 to 25 cents. I was picking up shares all the way along here, and I had that tremendous run for 3 or 4 months last year, and since then it's gone back down to the lows, and it's kind of went dormant again. And just this week we saw they released a quarterly report which showed about 25,000 ounces of gold production at less than $1,000 an ounce. I think maybe 900 Australian dollars. So their margins were almost $800 an ounce, and that really set the stock alight on Tuesday. You can see there the highest volume day in many years now. This, to me, looks like the start. This could be the start of a real trend here. We saw a follow-up day on Friday, again with tremendous volume, what most we've seen all year. And I don't think it's just on the back of that gold production. I know that was a good figure. Their guidance this year, I think, is about $1,200 sustaining costs, I think 65,000 ounces. So it's decent, and that's one of the reasons I've always liked Alkane as a company to invest in, is that not like some of these other companies which have got these speculative materials and projects. They have that, but they have the gold mine as well, and the valuation has never really included the gold mine, despite the fact that it was a decent mine. They've had problems for the last 6 to 12 months, I think, with heavy rainfall and just the high costs, but when it hits some sweet spots, it tends to be quite a good producer. And you saw that a $20 million cash build. The mine was only valued at probably $50 million in the share price. So it really sort of pays for itself in a few quarters, a few decent quarters anyway. And it's got some, they've got some good development ground as well, exploration around there, hopefully to add ounces into if they go underground too. But the rare earth market, I think, is what's really sort of behind this, might be behind the scenes in this volume as well. I think there's definitely a turn there in the Alkane report, and also in the Linus report, and a couple of the other rare earth companies. They talked about the improving market, and I think some of the rare earth elements are up 25% this year. It's an opaque market. You don't hear about it too much because it's all sort of contract pricing, and but if you look at the Linus share price too, you can see they've had a really good run, and it's this year sort of peaked out around February at 14 cents, and there's this real sort of heavy resistance level. I mean, this stock used to be $3. It's one of them, a bit of a terrible story how it's, they've been diluted into all hell. They've got, I think, almost 4 billion shares on issue, but I'm thinking this chart might be set up for something, a bit of a move as well, if the fundamentals of that market. I think their debt problems are largely sort of in hand at the moment. They've got them under control. It's still a huge debt they've got, but I can see this stock really going on a run. The thing about the rare earths market is that it has the potential to be, the 2010, 2011 rare earths bubble was probably one of the most vicious in any commodity of the last 20 years. And I think that has the potential to come back and do a sort of a rare earths 2.0, I've called it before, that's similar to the way that lithium has in the last 2 years. Lithium bubbled in 2008, along with all the other commodities, but then has had that real sort of secondary move in 2014, 15, 16. And you've seen some companies like Alkane Resources go from $3 to zero and back to a dollar a share sort of thing. That's I think it's been adjusted since then, but I'm feeling like there might be a potential for some moves similar to that in companies like Alkane and Linus, maybe not to the same extent in Linus because they have that dilution. You can also see, if we look at the rare earths ETF, this is not a big one. in the sense that it doesn't drive the market. It but it's got companies like Linus are some of the major constituents of it. And you see here some really excessive, it's very overbought and probably due for a little bit of a pullback. But you can see some decent volume coming in, probably in the last couple of months. It had that really good run at the start of the year, and then topped out around this sort of 20 level. This is a pretty small market cap, this rare earth, so it might be a couple of $100 million. But I think it just shows you there's definitely some money coming in here. And you can see if you go back and this is down, this probably not even, that might be the high there in 2011, but this is down sort of 90%. This is probably the most beaten up market of almost any of them. So along with uranium probably, but there's some real signs of life here. And I think if you have a look, and it's probably a good idea to go and, if you're interested in this space, go and read some of those Linus reports and the Alkane stuff, and maybe just some online articles talking about how the Chinese are really cracking down on production of some of these rare earths. And it's really dirty production. And China is the source of supply for 90%, I think, of the world's demand. So it's always had those political problems potentially. That's what set it off in 2010 when China stopped exporting to Japan. And all that stuff that happened in 2010, 2011, a lot of those factors that set the market alight still exist today. And that's what I've really been waiting for quite a while. And Alkane's been my preferred vehicle for that, just because they had that steady revenue from the gold mine that meant they didn't have to dilute the share base. And it seems to be a fairly well-run company. They've sort of gone about everything by the book, but it's been waiting and waiting for that the market to come alight so they can get financing for their project. And if it does, this could go back to $2 a share. And that's what I've always sort of believed, that it was possible again, that this market would come to life. And I'm just starting to see some tentative signs of that. But even if it doesn't, I think that's the longer term, longer term hope for, and it is only a hope at this point. But I think this trend, this beginning of this trend, is extremely similar to the start of this move in 2016 from Alkane. You can see here some big bars and some consolidation, and again you get these 10% moves on a day. Arrow's gone a bit dodgy there, but so you can see that trajectory. We're seeing it again now. Heavy moves up. So I can see this moving quite quickly back toward that sort of this level here around 45, 50 cents. That's my, it's seemingly like it wants to move that way, especially that volume is really pointing to that direction. So it's a stock that I actually had sold out of my shares sort of around 30 cents on this downtrend, sort of not believing, and just thought might wait until it started to catch a light. And I bought in again when they released their guidance on gold production was going to be higher, which sort of pointed toward that really good quarter. I'm not sure why that initial announcement didn't really have much effect on the share price. I mean, it was obvious that the shares, that they were going to have a huge, based on the guidance they'd released, the cash build was going to be significant last quarter. Maybe not as good as what they announced, but it was clearly going to be their best quarter for probably 18, 24 months. Anyway, that's something I'm following at the moment, and I think from a trading perspective, it's a stock you probably want to be on because it looks like it wants to move up quickly.